We are with the improvement in crude oil prices, partial global economic recovery amid optimism over the distribution of COVID-19 vaccines by most developed economies. Nigeria's foreign reserves is experiencing a positive trend since the beginning of the year 2021. Yes, in a recent report released by the Central Bank of Nigeria, the external reserves stood at $36.39 billion as of January 27th, indicating a slight drop from the $36.52 billion recorded in January 25th. The figures of the foreign reserves commenced the year at $35.65 billion compared to $34.94 billion at the end of November 2020. Well, let's break it down by analyzing the connection between the rising pattern of foreign reserves amid the improvement in global crude prices and partial economic recovery on the global front. I have the right person in the house to talk about this. He's the head of investment research of the United Capital PLC, Mr. Wale Olusi. Mr. Olusi, thank you very much for your time. I appreciate this.
Thank you for having me. Good afternoon, Taylor.
Yes, first, let's start with this connection between rising crude oil prices, a little bit of stability that we've seen in the global economy. Well, we still see some restrictions one way or the other, and our foreign reserves, external reserves. What do you make of all of this?
Well, Nigeria's major exports of foreign currency and remains crude oil, which accounts for, roughly 90% of our, export earnings, 75% of government revenue. So because of that, the proceeds of oil in dollar terms have a huge effect on our external reserves. When oil prices improve or Nigeria find a way to increase production and sell more, then the external reserves improves. Apart from external reserve improving, the economic prospects, the way foreign investors look at Nigeria, broadly improves. So apart from, proceeds from oil adding to the external reserve, the fact that Nigeria's economic prospect or outlook improves, that attracts foreign, investment into the country, either portfolio investment or foreign direct investments. All of that have a way of, boosting, accretion to the, external reserves. But, the vice versa happens when oil prices start tanking, and then proceed from oil to Nigeria also starts reducing. The economic prospect of Nigeria also becomes a bit blurry, and then rather than coming in, foreign investment starts going out. So you have a net capital outflow, and then the central bank starts doing everything it can to preserve the size of the external, and that's what has been happening since last year, 2020, when the pandemic struck, and we saw foreign capital flowing out, and oil prices tanking. But with the intervention of OPEC and some level of stability and improvement that we've seen in oil prices, and of course coupled with the intervention of the CBN in terms of managing demand, external reserves have been mostly stable, but there are pent-up demand. There are a lot of foreign investors who want to take their dollar and leave this country, but they can't go because the central bank is trying everything it can to manage outflow from the reserves.
Now, Wale, let's look at President Joe Biden now. Many are saying that with all these moves, prospects for global trade could improve, and this might in turn support currencies of all countries. Do you think that would also help the Naira, one way or the other?
I think it does. I mean, one thing about the former President Trump was, the trade part, the trade dispute, the, tariff increment, and, protectionist, policy stance that it took. That created a lot of distortion to global trade. And when trade reduces, the global economy itself, instead of growing, slows down. So, with a new president on board, who is likely going to favor trade, who is likely going to review some of these trade policies with China, with the EU, and so on, most of whom are key export partners to Nigeria. Economic activity in many of these countries will increase because there will be more demand for what they produce. There will be more demand for energy, which powers most of the factories in China, and of course in Germany, where you have the largest car manufacturing plant around the world, and so on. And demand for crude oil improves. So that is good for the external reserve that we just finished, talking about right now. That is good for dollar inflow into Nigeria. That is also good for the economy of Nigeria, and then ultimately it's good for the naira because you now have stability because the central bank can increase the amount of external reserve it has, and then they can better supply dollar to the I and E window and then create more stability in the market.
So, Mr. Lucy, we're looking at about rates at the NAFEX. I'm not particular about any date, but about 394 naira at a particular time to a dollar at NAFEX I and E window. And at the parallel market, we're seeing 475, 480, depending on where you get it from. I just want to play the devil's advocate here now. What do you make of this disparity that we see with regards to our currency? Do you think that a devaluation is another way out? We've done that one way or the other in 2020. My research shows that we lost about 8.2%. That's Naira lost about 8.2% of its value in 2020.
Okay, I think it's good you try to restrict all the conversation to the I and E window, and but when you talk about the currency in Nigeria, you can't look at the I and E window alone if you want to see what is happening clearly. You must look at what is happening in the parallel market. Yes, where Naira is actually trading for about 477 as of yesterday. The I and E window is where you mentioned about 395 or 397 or 399, depending on where you are getting it. There's also the BDC rates, something in between the parallel market and the I and E window. There's the official rate that the central bank is quoting on its website for official activities of government, as well as other things. That one is still at around 379. There's a lot of disparity actually. Before the pandemic, what we used to have is a convergence of rates where both the parallel market and all these other rates were around 360. But the official market rate, the one the central bank is using to calculate the budget and other things, is around 305. What can we make of all of this? I think Nigeria is yet to decide whether we want to allow the naira to be flexible or be managed. So what we are doing is, something in between, something that works for everybody. So for the government, what we continually have is a situation where the official rate trade at a little bit stronger. For example, currently is around 379, and the market rates where importers and exporters and a lot of foreign portfolio investors trade, that one trades at a little bit premium to the official. I think it's all about the central bank trying to manage the stability of the naira by creating a window for a lot of people. The problem with that, however, is that it confuses investors a lot. Many of those who speak to us that they want to come and do businesses in Nigeria, they are always confused which rate should they use. But in terms of outlook, and of course, speaking to the parallel market rate, what we expect is that with improvement in oil prices, and of course with the vaccine and a likelihood that somehow we will get used to COVID-19 and the number of infection will reduce and economic activity as well as restrictions, all those things will go away. Economic activities will come back alive fully. We expect oil prices to improve. We expect foreign portfolio investors to start looking at Nigeria differently. And then, the amount of reserve in the external reserve improves. And then central bank is able to intervene more in the I and E window, as well as the BDC. If they are able to do that, what we expect is that the parallel market rate will now converge to the official rates, maybe sometimes before the end of this year, hopefully, if everything goes well.
Okay, let's wrap it up on this note. Fitch is saying that $42 billion for reserves might be achieved this year if we continue with high oil prices, steady production outputs, and no issues around the Niger Delta region, and the money continues to come in. Do you think that will happen? That will take about 8 months of imports.
Sorry, say that again. You said Fitch said something.
They're projecting that we could get to $42 billion, talking about reserves for the year 2021, if we have the steady high oil prices and all that we have at the moment.
I mean, it's very, very possible, to be honest. It's possible. Central Bank has done a lot to curb importation. That's a big factor. You know, if Central Bank can, limit the import bill, then you are managing outflow. And then with improvement in oil prices, if Nigeria approaches the Eurobond market, for example, to raise capital, or we get any other loan, remember World Bank has promised us about 1.5 billion or so. If all this money comes in, it improves the reserve, and in a short space of about 4 to 6 months, that can actually get as high as 42. It has happened before in between 2017 and 2018. We got to about 45 billion. So I think it's not impossible.
Head of Investment Research, United Capital PLC, Mr. Wale Lucy, I really thank you very much for your time on the show today. It's really appreciated.
Thank you for having me. Yeah.